Hello, welcome to the Wealthy Trades Daily Market Forecast for May 8th, 2015. Let's get started right away. Real quick, let's recap yesterday. It was a fairly decent rally day yesterday for the market. Our trade, we went short AEP, down. It was basically break even. It was down about 2 cents for the day. Not horrible considering, obviously, break even is not bad considering we were shorting in a market that rallied up fairly big. It does look like the market is poised to gap higher, quite a bit higher today. It's going to be interesting. Let's actually look at the SPY because the SPY is going to gap higher. Jobs number came out at like 224 or something jobs, which is good. The market's going to always move on a big jobs number, whether it's a good number or a bad number. It's always going to move. This was a decent number. It's actually a little above expectations. That's good. Looks like we're going to gap higher. The SPY right now, S&P is up about 14 points. We'll probably gap to, just to give you guys an idea, probably maybe even close to 210. So let's kind of look at that a little more in depth, that 210 area. So probably right in here. It's going to be fairly interesting to see how we handle this area because there's some decent sized selling pressure in here. So it'll be interesting. So we'll see. We could potentially put in a nice big rally day if we kind of blow through some of this selling pressure here. Could put in a nice rally day. And that'd be good. In fact, the levels to win data shows that if we hit, and we're probably even going to gap to this 209.88, that's the expected counter trend level on the SPY. Well, historically, when it hits that, all right, it doesn't hit it as often as it hits the counter or the trend side. But when it hits this, and it's probably going to gap there, it tends to lose money. Meaning, when you try to short that level historically, it's not a good level to short. So if we hit 209.88 in the SPY today, which we're probably going to open up at that level, we could potentially see a nice rally from there, historically speaking. Weekly trades. Our weekly trades are doing phenomenal. These are really doing well. For the week, the SPY, as of the close yesterday, is down about 1% for the week. Our weekly trades are up about 3%. And how did we get there? Well, we went short SWN, and SWN opened the week. All right, it opened the week at 28.80, I believe, was the price it opened at. Yep, opened at 28.80. It's trading at 27.06 right now. It's up over 5% on that short. And then UNH is up almost 1%. This opened up at 113.70, and we went long. So we did a pairs trade, long UNH, short SWN, and overall for the week, that trade is up about 3%. So really good outperformance there in comparison to the market that's down about 1%. So great there. Let's see what we're going to be doing today. I'm kind of really glad looking at the futures. The futures are up. You got the Dow up 160 points in the futures right now. And I'm glad that we're not just taking a straight bias position short, because even though, today, even if we were gapping up, we could be gapping up into some selling pressure areas. But we are going to do a pairs trade, and it looks like we're going to go short in the XLE and long in the XLB. So what we're going to do is I'm going to bring the energy sector stocks over into my portfolio. I'm going to hit the plus sign here, bring all those over into my portfolio. I'm going to look for the best shorting opportunity within the XLE to go short. So let's do that. Let's use our first drill down technique, which is just simply looking at the levels to win profit and eliminating anything that doesn't make money on both sides. It's the simplest form to eliminate, and it's the quickest way to pare it down to a more manageable list, right? So APC doesn't make money on the trend side, get rid of it. Yin loses money. What it tells you is the reason why we look at that. Some people, it's very important to understand, why do we do what we do. A lot of people don't question systematic process or question things enough. Well, here's the reason why we look for a profit on both levels. These profits indicate trading in the direction of the trend. So BHI, downtrend. So what this profit is telling me is, historically, if I would have shorted, if BHI on a Friday, every time it was on a Friday over the last X amount of data, over the last year or two, if I would have shorted and it hit the expected downside on a Friday in a downtrend, BHI, would I have made money or not? That's what this levels to win profit's telling me. So if it's profitable, it tells me yes. Historically, if I would have just placed, if that's the only trade I did, in BHI on a Friday in a downtrend, if I just shorted at the expected downside level, that's a historically profitable trade. That's what I want to know. On the counter trend side, it's the same thing. If BHI on a Friday was in a downtrend and then hit the counter trend level, so it hit 66.93 historically, when it hits that counter trend level, doesn't make money? And the answer is yes. So it's very powerful. It helps me pick and find the stocks that have the best opportunity, that aren't just moving in the direction of the trend or have a high hit rate on the trend side. That it tells me it has a high probability of actually continuing to trade in that direction. It shows that BHI on a Friday in a downtrend has pretty substantial weakness simply because of the stats. And that's what if I'm going to short a stock, I want to know that I'm shorting the stock that has substantial weakness, has the best probability to stay weak. That's what I want because I'm shorting. Whereas CAM, for example, historically on a Friday when it's in a downtrend, if you would have tried to short at the counter trend level historically on a Friday in a downtrend in this stock, CAM, you would have lost money. Not a lot of money, but you would have historically lost some money. We don't want that. Whoops. What did I just do? We want to only go into stocks that make money. Sorry about that. So I'm going to get rid of CAM. EOG, keep it. MER, see you later. NE, keep it. Okay, and remember, UNH and SWN are our weekly trades. So now what I'm going to do is I'm going to look for that spread. Why do I look for the spread? Because this tells me it's got a 32% chance of closing below this level. Let's only have a 5.8% chance of closing above this level. Where if we're shorting, we want a high probability of closing below this level and a low probability of closing above this level. That's what we want. It just makes it's logic. It makes sense. So 32 and 5, that's a big spread. Well, let's compare that. It's better than 30 and 15. So NE is better than EOG. It's better than BHI. And it's better than APA. Actually, both these, nope, it's better than APA. So NE is going to be our short. So what do we know about NE? We know that it closed at $16.41. Okay. We know that today is Friday. Right? This information is calculated on Thursday's close, but then it looks at historical Fridays. When NE is in a downtrend historically on the upcoming day, which is Friday, what happens? Well, here's the expected high. It should go up to 1683, right? That's the counter trend level because it's in a downtrend. Or it should go down to 1603. It has a 57% chance of hitting the downside, which is good because we're shorting. It only has a 30% chance of hitting this. That's great. It has a 32% chance historically of closing below this number. That's great because we're shorting. It only has a 5% chance of closing above this. Great. And also, historically, I know, if I would have just traded NE on a Friday and I would have shorted at the expected low, historically, I would have made money. Also, if I would have traded NE on a Friday in a downtrend and I would have just shorted at the counter trend level, if it hits that, I would have made money. That's what I want to know. So there's 3 shorting opportunities in NE today. Short at the open, hold all day long, close at the end of the day. Short at the counter trend level, right? This, because the market is going to gap higher, NE could potentially have a really good chance of hitting the counter trend level. It could hit 1683. Well, if it does, that's historically a great level to short at. So shorting at 1683, holding all day long and closing at the end of the day is a great trade. Also, if it hits 1603, if we get a big sell-off and it hits that level, that's another good area to short at. So you short at the open, you can short at 1683, or short at 1603, or all 3 of those levels and close at the end of the day. But we're not just going to go short. And the reason why we're not going to just go short is because we are in a downtrend, obviously. We're starting to get more breadth to the downside, 65.9. Okay? But the quality is only 44.5%, so it's below 50%. So we got to go long. What are we going to go long? Well, all these sectors are in a downtrend except XLB. So we got to go long in XLB. We got to find the best long opportunity in the sector that's moving up. So I'm going to move all those stocks into my portfolio. All right, so I'm going to move all these into my portfolio. And for now, I'm going to get rid of SWN and UNH because those are the weekly trades. So NE is our short position. So now I'm going to use the same pair down technique. I'm going to eliminate anything that doesn't make money on both sides, right? So I'm just going to go through this fairly quick. And wow, all these look to make money. Okay, they all make money. So what do? Well, we got to find the ones that have the widest spread. So let's just compare. All right, 21 and 1.9. That's it's a little better. So 21 and 1.9 is a little worse than 28 and 7. So SEE is better than Sale. All right, 30 and 11 compared to 28 and 7. SEE is slightly better than NEM. 30 and 5 is better than 28 and 8. So MLM is better. So 30 and 5 compared to 28 and 9. Okay, so MLM is better than that one. 38.5 and 13.5. Let's get out our bus. Or I could do the math in my head, but it's faster just to do a calculator. 38.5, 5.8. That's 25. And then FCX, I believe, is also 25, right? Just quick math, 38.5 and 13.5, that's 25. So these are the same. So these two are good, but so I'm going to keep both those for now. It's better than that. 28 and 11 is better than that, and it's better than that. So we got to pick between these two, FCX and MLM. So how do we, because they both make money, right? So they both make money on the levels to win profits, and they both have a 25% spread here. So how do we pick the one? Well, what we can do is we can say which one has the widest spread HPP, meaning, right, what's the probability? So FCX, for example, closed at 22.91. The expected high, because it's in an uptrend, the expected high today on a Friday is 23.37. It's got a 51.9% chance of hitting that. That's great, which is higher than MLM. MLN is trading at 150.58. It's got an expected high of 152.56, and it has only a 50% chance. So slightly higher on FCX. Okay, but FCX has an expected low of 22.59, and it has a 34.6% chance of hitting that. So it's got a little bit, a decent chance of hitting the downside too, which is not what we want, right? So it's got a 17% spread, okay? So we want a wide spread there too. Well, what type of spread does MLM have? Well, it only has a 25% chance compared to a 34% chance. FCX has a 34% chance. Well, MLM only has a 25% chance, so there's a 25% spread there. So MLM, we usually don't have to go further than that. It's just typically profit, narrow it down, and then find the one with the widest levels on level spread. But when we get the same, both of these have a 25% levels on level spread, then we take it to the HPP and find the one with the widest spread there. This one has a 17% spread. This one has a 25% spread. So MLM is the long opportunity for today. And there's 3 entries in MLN, just like 3 entries in NE. So MLN, it closed at 150.58. All right, so go long at the open. So that's what I'm doing. Okay, but also historically, when MLM is in an uptrend on a Friday, if you would just trade at the trend level, which is 152.56, if you just took a long position there and closed at the end of Friday, you made money. You also made money if you just traded at the counter trend level, 148.76. If you would have just trade there, take the trade, go long, you would have made money. So you can go long. I'm going to go long at the open. I'm going to close at the end of the day. I'm going to also add if it hits 148.76. I'm going to add there, close at the end of the day. I'm going to add at 152.56, close at the end of the day. So long story short, I'm going long MLN. I'm going short NE at the open, closing at the end of the day, and I'm going to add at all levels to win levels. That is my trade for today. The weekly trades are doing phenomenal. As I said, we are short SWN and long UNH. That is doing great. And I am going to be planning a couple webinars, live webinars, to go in depth into the Wealthy Trades dashboard and strategies you can use, just to make sure everybody's on the same page. So let me know if you have any questions. Email me at info@wealthytrades.com. I'll be doing my weekly recap over the weekend. Make it a great weekend. Have a great day. Thanks. Bye.